Ladies and gentlemen of the interwebs, welcome to the Beacon TVL show, your source for news and takes from all the things in the weekend and the news to educate your dear users here in the world of on-chain finance, blockchain investing, all that great stuff. I'm your host, Chris, the DeFi professor, and we got a great show lined up for you today. Want to go ahead and bring up the panel. Got our one of pretty much the man, in my opinion, in this space. Great co-host. We've got Robert back. Hire this man. He got hired. He's now
A lot quicker this
exactly,
time.
exactly
Yeah.
at,
Mhm.
Bitcast doing comms there. Congratulations, Robert. How are things going with you, sir? I know you said you were tired because you did a couple DJ sets over the weekend.
Yeah. Yeah, that's my second life is DJing. But yeah, really stoked to be with Bigcast. Um, I was with Talisman for a year, and that's really a BitTensor focused wallet, and it's really cool to still be in the BitTensor ecosystem.
Yeah, Bitcast, which is a subnet that is solely focused on it's mainly creator models, correct, with AI insights.
Yeah, so it uses the BitTensor incentive mechanism to basically create like a really efficient relationship between creators and brands. It's pretty cool.
Yeah, and I can say that full transparency. I actually do create some things through their creator portal. So for those of you who are curious about talking about BitTensor, or actually you can talk about just about anything now, right? With regards to the topics that are available, it's up to what brands are specifically looking for right now, right? Can you talk a little bit about that?
Yeah, sure. Yeah, so yeah, basically brands can launch campaigns. Right now, it's still BitTensor really. They did actually recently bring on BitGet, the exchange,
Okay.
and and they're currently in talks with other exchanges. So that likely it'll be like talking about doing promo stuff for exchanges basically. And so if you're a creator, you can go to bitcast.network, check out the creator portal. If you meet a certain minimum threshold for your account activity for your YouTube account in the past 90 days, you should be able to qualify. And once you qualify, yeah, you can choose a campaign to create content for, and then you just automatically earn based on how much watch time you actually receive. So
Yes.
less about clicks and more about actual watch time, revenue metrics, and things like that.
And I can tell you that it is true. It's great. I'm actually considered. I'm actually creators technically in this system are miners, correct?
Yeah, exactly. So you don't have to do the whole technical side of the mining part. You can just plug in your YouTube account and and start creating content based on a campaign. But you can also actually technically mine, like connect your um, you know s- uh, computer or sort of uh, I guess you would say like a it's not server but like a sorry like a node essentially to the network and mine yourself as well. But yeah, as a creator, you're effectively a miner. So
Which I think is great. That's one of my favorite things about the whole ecosystem. And that honestly, for me, when I look at subnets, not only do I look at what are they providing in terms of an AI based digital commodity, I'm also looking at how can I be involved in the process because to me that's the most powerful part is that the democratization, if you want to call it, of contributing to a subnet success, which I think is something we'd all love to do, um, is available for the majority of these subnets. Now, some of them are very complex, like you're not going to have the hardware to provide inference, for example. And if you do, that's awesome. You can get some pretty great kickback for that, or um, having sensors up, or just whatever is out there. There's a variety of things, and we've featured quite a few of the different subnets, here on this show because we're big fans of BitTensor. But yeah, really excited for you, brother. Excited to see what happens next for you guys with you at the helm. So
yeah, thanks. Yeah, it's a pretty revolutionary kind of idea because a lot of projects massively overpay for KOLs or influencers usually. And at the same time, a lot of smaller or mid tier creators don't get the opportunity to get those deals, and so this is like a perfect kind of uh, equilibrium sort of equalizer, where any creator of any size can hop on and just start earning. It's cool.
Exactly. We'll come back to it, but if you happen to be a creator, check out bitcast.network. And oh, you guys got it. Did a nice little refresh here of the branding. This looks good. Yeah,
Yeah.
great stuff, man. Bitcast.network. Check it out. Bitcast.network.
Yeah. Cool. Thanks, buddy.
I wanted to talk about this video because we're winning so much in this world, and it's just like if World 1, 2 in the original Mario Brothers was like this, imagine how popular and how long this would be still going in today's world. And it's amazing, honestly. It's like I love the fact that they've opened, or at least they've found a way to open it up so that I didn't even see the band. That's amazing. But this is the part that got me. I'm like, wait, you can get to level 9? I don't remember there being a warp for this. And maybe there isn't. Maybe they just put it in the game. I mean, in this video. But I found it entertaining, and this shows my age. So, did you play the original Mario, Super Mario?
Yeah, definitely, yeah. Yeah, I played it when I was a wee lad.
Same. Same. That was a little bit more.
Response, yeah.
A little bit more than a wee lad, but anyway.
I was born in '84, so
Mm-hmm.
yeah, I think I played it I started playing it like at 4 or 5 years old. It was pretty early, actually. Yeah. Anyways,
Yeah, I was in Little League.
okay, there you go.
All right, so I don't know if it could be the recoupling of crypto and equity markets, but with everything at a quote unquote all time high, Bitcoin got close to reclaiming 80 over the last just couple days. Ultimately, I think we're still range bound here. There's plenty of bad news that's on the horizon to bring this back down. Right now, actually, there's the hearing for the new Fed chair, Kevin Warsh, the nominee that President Trump has put through. He's going through it right now with multiple senators, and who are asking him questions, such as Cynthia Lummis from Wyoming, Tom Tillis from North Carolina specifically is, pardon me. He is having, he has actually said he will actually support Kevin Warsh's nomination if the Department of Justice drops its current suit or investigation into current chair Jerome Powell, which is a very interesting take on it. But I mean, at this point, he's literally out of office in less than 30 days. Why continue to try and push this narrative that he's like this criminal, right? And granted, there are people who don't agree with his take, sure, but he's a data-driven guy. If anything, Kevin Warsh is a hawk, so he may make Powell look like a dove. He also has said multiple times that he's going to act independently of President Trump, and President Trump has never ever pressed him to lower rates if he was to be nominated. So anyway, markets are still rangy, and that's a good thing in my personal opinion. We don't need supreme volatility, at least for Bitcoin and Ethereum, moving forward. So I mean, this has been a good market to definitely do some concentrated liquidity, some delta neutral, some hedging, even some tranching at this point. Before we get to the really heavy stuff, what do you think about the current market currently, Robert?
Yeah, I think it's still technically ranging. Bitcoin is looking pretty strong short term. I don't know if that's just like a sort of like a bear market rally. or if it's an indication that things are going to clear up in the war, or that Kevin Warsh is secretly a dove. Um,
We'll see.
yeah,
He
yeah,
definitely
but
has some interesting ideas. I'm curious to see what he does.
yeah, I'm curious to see how they manage interest rates with this war going on as
Yeah,
well.
yeah, because he does believe that the labor market is in trouble, and we'll see exactly kind of how these numbers support some of the policies that he will be putting through. But the last thing we need is something like stagflation to really be an issue. But we'll see. Uh,
Mhm.
there's some other things that are happening. Apparently, ships are just pushing through the blockade right now. Uh, I didn't realize that there was a blockade. I just thought that was one of those things that he's going to just say. But apparently, ships are just rolling right through. So we'll see. We'll see exactly how today ends up. Today's actually a fairly pivotal day. Uh, there's been some interesting news behind the scenes, and again, I don't know how much of it is actually true. Could the ceasefire's done? So we're going to see some action this week of some sort. It all depends on what that is. But I would say right now, looking at the continued ranginess, I've been mentioning this is probably going to continue to stay this range bound, in my opinion, for at least the next couple of months. So if you're an LPer, continue to eat well. Um, but we'll see. Not financial advice, of course. Looking at bubbles, Rave is gone. I don't know if you knew about Rave DAO. It was like one of the funniest things that I saw was at least I don't have to do research on what Rave DAO is anymore. But it was apparently a musician creator type of DAO that was supposed to. It went up 2,600% or whatever the number was, and now it's being investigated for market manipulation, which caused it to go from like $11 to like down to pennies. So
Yeah, I'd
you
heard about
being a
it.
music person, Robert, may have been interested,
Party's over now.
but right, the
Yeah,
the house lights are on and everybody is walking towards the exits in
yeah,
states of
those
stupor.
harsh bright lights are on, and everyone looks less
Mm.
attractive.
But overall, I mean, when Bitcoin is up, you're going to see a lot of bidding on a lot of altcoins. Um, Interesting to see that Sky, which is the old Maker token, is continuing to rise. Say looking interesting at 12. That's an interesting push there. Aptos and Algorand were named as two of the leaders in quantum preparedness. So Aptos being up here is not surprising to me. I don't see Algo here anywhere. Maybe it is. It's just small. But there's 1.8 for Algorand. But we'll see. But let's go ahead and move on to the quick things real quick. And I apologize for the late start today. Kind of had some technical issues. Had to reinstall a couple of updates that came through, so that's why we're late today. But with everything that's going on, we've had numerous updates from the SEC and the CFTC, Robert, about what is a security, uh, the broker dealer relationship for DeFi front ends and DEXs. Are they going to have to actually register with the SEC and CFTC? The answer is no. They're excluded. And now the actual Clarity Act, which is in the hands of Senator Tom Tillis. Uh, Interesting to see exactly why it's in his hands, but regardless, he he's holding it close to the vest, and apparently, the mandate was given by President Trump. He wants it ASAP. He's ready to sign it, but it looks like, due to Fed Chair nominee Warsh's hearing, we may not see it until May for markup. Now, when we were talking about this before, Robert, we were hoping, April 3rd was supposed to be that date. That it was just like a thrown up in the air kind of date because it clearly wasn't going to be done by the end of February. So now we're looking at May. And if it doesn't appear in May, this thing is dead because they have to now look at the midterms because the gerrymandering bill in Virginia, I believe it passed. So it now has redistricted Virginia in a very compelling advantage for Democrats to run. So we'll see exactly how this kind of plays out. Uh, but no shock that bank lobbying groups are really pushing hard against getting this through. Um, we don't know what the stablecoin yield compromise is. In my opinion, I don't think there is one. I think that stablecoin yield, from what I keep hearing, has always been a non-starter with the banks, and I don't believe there is a yield compromise because 3 weeks ago now, Coinbase got their banking license. So at this point, it's kind of moot. But we'll see exactly kind of how this plays out. I don't know exactly what's holding the rest of it up, but I think that they're looking still to amend the Genius Act. So, I mean, we have all of this guidance, Robert. Does it matter anymore? Now, obviously, it matters, but
Yeah, it matters, I think, but yeah, but the market hasn't really seemed to respond to it. Even the promise of it. Like forward looking or sort of front running it. When it's been close, it hasn't really generated, or when it's been close in the headlines, it hasn't really generated much action in the market, I don't think.
yeah,
So I don't know what I don't know what that's exactly an indication of.
I think it's good that that the CFTC and the SEC has decided to come through um, and put up these ideas because it's important that we have an actual framework because that will give the full green light, right, for institutions to just jump over and say, well, here's the framework. This is exactly what's going to happen. We'll get definite, concrete talk about the about crypto in this country or digital assets as part of the financial system moving forward. So, with that said,
Mhm.
we can move on to the big stuff. Not the Clarity Act isn't big stuff, but we just keep. It's like we're chasing our own tail on this. It's been more
Yeah.
than 90 days since the Clarity Act was passed by the House. So at some point, we need to have this actually put through on the floor because a much larger chamber has come together on the legislative side and has pushed this through. So we need to get this pushed through. With that said,
Just pump it back.
yeah, all right,
Just
pump our
pump it
bags.
back.
Our bags, please. We need to keep winning. That's the thing.
We need to
We
win
need
so
to
much it hurts. Yeah.
exactly. So Drift was the recipient, if you want to call it that, of a 295, 200 and I don't remember the number anymore. It was a large number, 230, I think is what the number was, with regards to the exploit from North Korea. Apparently, that is exactly where it's coming from. I don't know if it's been confirmed, but I mean, wallet-wise, ZachXBT has kind of pushed through what that could be. So the update on that is that Tether cut a check for $150 million to Drift to help them recover because Drift being a leading perp dex on Solana, not just for perps but also for vaults and just all kinds of strategies. Right, Drift is really a one-stop shop. At one point, they were a leading prediction market as well, with Bet on Drift, and that kind of died on the vine. But Tether putting in $150 million, saying that you have to expand your trading pairs so that USDT is now the the stablecoin backing here, is pretty novel because, to be frank, Tether is not big on Solana. So if anything, this was like here's a little wink wink help to help us get more established on Solana. I think this move was honestly fairly genius because, I mean, Tether's making almost double digit in profit, billions of dollars every quarter. I mean, this is a drop in the bucket for them to get for what you could consider free marketing to use USDT zero, which is cross chain across multiple spots. So, um, Robert, with everything that's going on with USDC and Circle, because Circle never froze the funds that were laundered, or rather that were drained, because they swapped to USDC and then bridged it to Ethereum, most likely with the knowledge that they knew that Circle wasn't going to freeze the funds. Tether did freeze those funds, but Circle did not. They said they won't do it without a judge order, which I called it 3 weeks ago. I'm like, honestly, and we've told our communities, you may want to consider putting some USDT in your portfolio. And it's not in the agenda, but Circle's being sued for $600 million now as a class action lawsuit. Regardless of where it goes, I don't think it goes anywhere because I don't think necessarily they have jurisdiction about that. Because even though it's a centralized stablecoin, I mean, we'll see, but it could set a precedent. So I actually have
Yeah,
converted a couple of my bags to couple of things to USDT zero, uh, because I think it's probably the proper thing to do. What are your thoughts?
yeah, yeah. I mean, it's good for Tether to capitalize on it. Absolutely,
Yeah.
that's good opportunity. I don't really see why Circle didn't do it though. Maybe they were concerned about optics around centralization. Probably not though, right?
Well, all right. So here's the issue with uh, with Circle, because Circle is now a publicly traded company, right? They did that gigantic IPO, and it's a bit of a slippery slope, right? Because they're public, they have to answer to shareholders. Would freezing those funds in the name of, you know, protecting users go against the decentralized ethos? I mean, but they're not decentralized. They're a centralized stablecoin, but in a decentralized world. My personal take is they should have frozen immediately, because the last thing I want is hackers using my protocol to now launder funds across multiple ecosystems, because it's not in the agenda either. They just released the native USDC bridge between all supported blockchains. So there's not dozens, but there's quite a few blockchains that you can natively move USDC between.
Yeah, I would say that they should be more concerned with how they're signaling their behavior to institutions
Yeah,
rather than traditional crypto folk.
but if they're waiting on a judge order, there is no way that they freeze it within the first 6 hours, right? Unless
Mhm.
they happen to have 24-hour judges on demand, because this thing happened in the middle of the night in the U.S. So, um, or rather late night in the U.S. So I don't know, man. It's like one of those really weird things. It's like, I think of it now. It's like, if they act on it, does it make them? Does it hurt things like the idea of like Tornado Cash, right? Use a mixer that was meant for privacy, but people are really using it for laundering funds. Do you want to be known from a brand standpoint as an oasis for hackers to go and move funds through, because they know you won't freeze them without a judge order, and by that time it gets there, that money is long gone. It's To me, it's a bit of a slippery slope. I don't know what the right answer is, honestly, but my take is they should have frozen. Hard stop. They have the ability to do it, to blacklist, to freeze funds, in a world where, that stuff can be moved quickly, and they're not slow. The North Koreans are very fast, and they know how everything works. So I think it was a conscious choice for them to use USDC because they knew they weren't going to do anything. And there's a whole rabbit hole of like North Korea infiltrating most of DeFi type that's bad for optics, and I'm not going to talk about it. So um, we'll go ahead and move on to the next thing, which is what happened over the weekend. And I think you were busy, so you didn't get to see this, but this was bad, to be honest. So
Yeah.
from a high level standpoint, let's kind of talk about what happened here. So Kelp DAO, they have the liquid restaked ETH token called RSETH. So from a high level, to explain this very plainly, when you have ETH and you want to get infrastructure level investments, I guess would be the thing to say, you can help be a part of the validator network. Uh, to be a validator node on ETH still costs 32 ETH. Most people don't have 32 ETH. So you can go to what's called a liquid staking entity like Lido, which is STETH, probably the largest. It is the largest. It's out there. And basically they say, you give us your ETH, we can just pool it amongst all of our other ETH in our distributed network. And then what they do is they give you a marker token, because let's say that you did have that and you did stake it with a validator, you can't touch it. Once it's in with the validator, you're part of the consensus. You can't touch it. There's actually an actual cool off period. If you wanted to withdraw your funds, you have to wait a specific amount of time. Um, Even with Lido, there's a cool off period, generally 3 days. If you actually use the actual redemption, you can always just swap it at DEX, of course. But liquid restaking is a little bit different because you can take, it's basically meant for the independent security model. So EigenLayer is probably the biggest customer, or at least the biggest architecture for something like this, and you can use RSETH as a liquid restaking token in the EigenLayer, EigenCloud system, where they actually sell security and other validator services to independent blockchain networks or protocols. And that's basically what RSETH is for. And you earn yield as you use it because you're being paid for leasing your ETH to the entity. Well, someone and it turns out it started on Unichain. They were able to mint 292 million of RSETH, and then utilize Layer 0 and their bridge with a valid message to then bridge that over to Ethereum. They then took that RSETH on Ethereum mainnet, deposited it into Aave and Arbitrum technically, and then borrowed ETH against it. So now they're holding that same amount in just ETH. This is problematic for two reasons. A, how were they able to mint $292 million worth of RSETH out of nowhere, move it to Ethereum, and then now we have a problem where they've borrowed it, they borrowed ETH against it, now putting bad debt on Aave. Aave has a contingency called, I believe it's called Umbrella for all of that. They don't have 292 million in the contingency. So now Aave is looking really bad with bad debt on the core network on Ethereum, and also a little bit on Arbitrum. So there's a lot of questions. And here's the thing. The way that the bridge works for Layer 0 is that protocols have what are called DVNs, or digitally verified. They're validator network nodes, basically, is what they are. And because Layer 0 is just a messaging protocol. For those who are unaware, all it is a messaging protocol. They can send messages between different ecosystems that are all connected through their OFT bridges. And the idea is like debit from this account, credit to this account. That's all that it is. It's just messaging. The liquidity layer is everything that's built on top of it, right? Like Stargate Finance and all of the other groups that put all of that in there. So now, Robert, we're in a situation where 290 million Kelp DAO, or rather RSETH, has been minted. Layer 0 was used to move it to ETH mainnet, and then Aave is now at the center of a large amount of bad debt. Uh, in response, multiple groups suspended their Layer 0 OFT bridging because they were concerned that this could happen to their token, right? Aave paused all markets that are ETH and RS ETH, and I think a couple of stablecoin ones as well. For it's going on more than 3 days. This is a very bad situation, guys. This is a very bad situation because we often joke it's like the death of DeFi. If something ever happens to Tether or Aave, we're going to be in a bad situation, right? Because Aave has more assets under management than at least 50 to 60 banks in North America. At least. They're like top 40 in terms of assets under management if you're looking at U.S. actual banking entities. If you count Aave as that, they fit in the top 40, which is kind of crazy when you think about how long they've been around compared to the majority of these institutions that are decades old. So this is the unfortunate part is that it's a Spider-Man meme, right? Kelp DAO is saying that this is Layer 0's fault. Layer 0 is saying it's Kelp DAO's fault for accepting the bare minimum because their system worked correctly. There's an asterisk on that. And Aave is like, we're working to figure it out. The reason I mentioned the Tether part, okay, so this is 290 million. This is roughly double of what the check that they would have to write to I just realized I'm not actually sharing the screen. My fault. Hold on. Let me grab another tab that would actually kind of add to somewhat of the drama of all this. Because there's what Aave can do, and there's what Arbitrum can do. So this is the Layer 0 statement, right? They said that everything worked correctly, which it did. This is the issue that happened. Trader, which is the portion of Lazarus Group that probably carried this out, they did a highly sophisticated attack of poisoning the downstream RPC infrastructure used by the Layer 0 Labs DVN. So Kelp DAO only had one signatory on this bridge. It was the Layer 0 Labs DVN. Most groups on here have at least a 2 or 3 of 3 validator node that all need to sign off before a bridge can take place. This all happens very quickly. They are blaming Layer 0 for only having, Layer 0 is blaming Kelp DAO for only putting in the bare minimum. With that said, Dune, yes, that Dune, the statistics group, put out a thing saying that 47% of the unique OAP contracts, these are the OFT bridging contracts, run a 1-of-1 DVN security floor. Now, Layer 0 has mentioned that the model that they have here is done so that customers, regardless of everything they tell them, can choose the amount of security that they want. Robert, you and I both know how stupid and expensive the security game is here in DeFi with regards to how much security firms are making off of these protocols. If you're gonna have a 1-of-1 setup, that 1-of-1 setup better be really fucking good, especially because the majority of these 1-of-1 setups can you tell me who you think that the DVN belongs to?
Can I?
Yeah,
Who does it belong to?
it belongs to Layer Zero Labs. So this announcement is totally is full of so much legalese. It's disgusting. This is the interesting part. So where we are at now, and I talked about this, on Monday on my research stream. DeFi is very difficult to hack because code is law, smart contracts, all of that is difficult, and it gets harder and harder to do so as more of these exploits come up. This was not a smart contract exploit, and that is the point that Layer Zero is trying to make here. The problem is they went after off-chain infrastructure, things like RPC nodes. Basically, what they did was they found a way to break into one of these RPC node providers, um, poison two of them, and then trick the Layer Zero Labs DVN into thinking that their request for 292 million RSETH was legitimate.
Were they using
Now,
Mythos?
that's the second question most people asked. We don't know. But what was interesting, so there's two things here. And and obviously, fuck North Korea, but they showed restraint here, right? Because they could have done 292 billion RSETH, you know? Because I think the actual liquidity of RSETH on the bridge was 49 ETH or something like that. Compared to how much they minted, very small number. So the fact that there's A, no circuit breakers for that, um, and B, the fact that Layer Zero doesn't want to take responsibility for the fact that it happened on their bridge. It's hard, right? Because Thorchain will tell you the exact same thing. North Korea exclusively, well, for the most part, uses Thorchain to move BTC and ETH across DeFi because they can. That Thorchain is amazing in that respect. Layer Zero is giving that kind of energy, I guess. We built the product, but this is a trustless and permissionless system. So it's like, the hardest part about all this is that everybody pointing fingers at each other does nothing to help the users. I know multiple people who had RSETH, who are still holding RSETH, that frankly are in a world of pain right now. Now, with that said, because it's a liquid stake token, they can just reissue a new liquid stake token. But that would require, well, it wouldn't be too bad actually. This happened actually to UBTC for, not Bedrock. Maybe it was Bedrock. It was a liquid stake BTC token. They just took all the holders that they knew and they just issued them a new one that was backed by something else. That is something that is the benefit of a liquid staked architecture, that you can actually just kind of do that. But let's talk about what Arbitrum decided to do, because there was ETH that was on the Arbitrum blockchain, because there was. Besides ETH, people were up in arms about layer 2s have no purpose, blah 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 blah. This didn't help, but what they decided to do is that the Security Council, made up of 9 members, they just said, we're not going to allow this to happen. And they took the 30,766 ETH that was in the wallet on Arbitrum, and they moved it to a vanity address. The address, by the way, is 14 zeros and then DAO at the end, which is that's a fun little vanity address. So now everybody is like, well, this isn't decentralization.
Yeah, pretty crazy. But how do we fix this?
That's the thing. Like at this point, so there's 3 options, and shout out to NGMI from DeFi Llama. Uh, Option number one is to socialize losses. If Arbitrum were to actually take this ETH and actually just socialize, just like release it to anybody who is affected, they would actually make most of those users on Arbitrum whole. The argument against that is that people will say, well, that RS ETH actually belongs to Kelp DAO. People say that layer 0 should cover the majority of this. Aave is working to figure out what they can do. Stany Kulichov talked about it today. He acknowledged the Security Council for recovering it, which could meaningfully reduce the potential exposure. They're not showing the hand of what they're looking to do, but the question in today's title is, DeFi will survive. DeFi will live. This sucks. Let's be honest. This is terrible. But does this kill DeFi? No. Because they'll figure out a solution. They'll work towards it. I mean, even Thorchain was able to fix their bad debt after everything that happened and stuff got unbacked. They created another token called TCY. And they, for the most part, made a lot of the users whole. Not everybody, but quite a few. Based on people claiming it's a whole thing. You can look it up if you want to research it. So that's the hard part, right? With you as comms, what's the best way to even communicate this? I mean, I think Layer Zero probably did what they probably should have done based on their legal standing. Kelp DAO did what they should have done based on their legal standing. None of them were great, but at the same time, now it's like, how do you help the users? And that's why I bring up Tether could be a white knight here if they really wanted to. And how ironic would that be? Considering the Aave DAO voted to remove USDT as collateral from Aave, from the majority of markets, 2.5, 3 years ago. What absolute cinema would this be if Tether... Oh. Oh, man. Tether forces their way back onto Aave as collateral by writing a check to cover the entire loss. Bybit did it.
It's great PR.
Bybit ate 900. Well, I'm not going to tell you the number, but they ate a 9-figure, off of that terrible exploit they had last year. Tether could do it. Tether could eat that easily. Drop in the bucket. They could sell some of their gold if they wanted to, or some of their UST bills to cover it. They own so much of both. Exactly.
Yeah.
Honking Mexican driver.
Yeah. Yeah.
I don't know.
I think
obviously, sorry for the dead air, but what do you? Isn't this crazy?
they were honking in support of Tether.
There we go. Support for Tether. I will say, just to kind of go over some of the options that you do have if you have Aave ETH and you can't move it. They have unfrozen the supply side. You still can't withdraw, but Fluid and 1inch, and I think EtherFi as well, are offering a way to take a haircut. Capacity is limited to 1 billion in ETH currently, but you can actually take your Aave wrapped ETH, I think it's AWETH is the actual ticker, and you can swap it into either EtherFi ETH or Lido staked ETH. The haircut, I think, on Fluid is 15 to 20%, which is not great, but it's better than nothing if you really want access to your liquidity. 1inch. Did they really? That's hilarious. They actually changed their logo to the actual one and then the in. It's crazy. Now, nearly 400 million people. $400 million has already been exited through this. Let me find the actual. Anyway, they're doing it for cheaper. They're doing it for much cheaper. And they're doing it to all assets. That's the difference at 1inch. So, there are options for you. If you have ETH on ETH mainnet, or even on Arbitrum, and you want to get out. But in general, this is mainly towards Ethereum customers. So, yeah, none of this is positive. Oh, and then the news today. Do I not have it on here? Yeah, here's Lido Cohen. Shout out to him. Yeah, that's how much has already been processed through Fluid. And shout out to Fluid and 1inch. They did this in less than, well, Fluid did it within less than 12 hours. It was 36, I think, for 1inch. But the coup de grace on all this is that one thing that people may not remember is that Arbitrum is the hub protocol, the hub chain for Tether for USDT0, which is their omni chain USDT. The group is now moving it to Tron, which, and I don't have it up here. Justin Sun was just like, what do you guys want? You can't take down all of DeFi and Aave over something like this. You can't spend the $300 million anyway. Well, guess what? They're like, hold my beer, Justin. And Layer Zero has done nothing to. They can't censor or stop the transactions because they're probably legitimate messages, right? So, I don't know, man. This has me gassed, brother. I'm just like,
Yeah.
ugh.
Yeah, it's a mess on
It's a big
so many
mess.
levels. Yeah.
On so many levels, right? So, looking at it from like the security researcher hat, because I've been watching a lot of the news from like Taylor Monahan and multiple other security experts. It's like at this point, this is a problem. The fact that 47%, that's nearly half, guys, nearly half of the Layer Zero contracts, and I'm a big fan of Layer Zero. To be honest. But you got to do better than this. The fact that 47% run on a one of one DVN security floor, and that DVN is Layer Zero Labs' DVN, doesn't matter how many validator nodes are in there. It's one of one. You got to raise the bar a little bit more. Yes, I know. It's a lucrative business for security, but you can't keep gouging protocols. Yes, I know a lot of them raise a ton of money, but still, guys, this is people's hard-earned money in a lot of cases. A lot of people are going to complain this is their life savings, and to that I'm like, why are you putting all of your money in one protocol anyway? If you follow us at Beacon, you know you never overinvest in any one protocol. That's something we talk about from day one. You should have a diversified bag allocated across multiple protocols in a specific strategy so that if one goes down, even the great Aave, your bag is not cooked. Because it's so important that you don't overinvest in any one protocol. And stuff like this is why, right? Yes, it sucks that this is all happening. But if you weren't overinvested, you'd be like, oh, this sucks, but I can still move on. You know, I can still, hopefully something works out with that. I still have other things crunching and bringing me passive income in this space. That's all I wanted to say about it, honestly. Any thoughts from you?
I think you covered it pretty well. I mean, I just think that this needs to be like all the sort of weak points here where this got exploited need to be addressed, and it's unfortunate that there's this finger pointing, because it shows a lack of initiative in terms of how, like, a lack of drive to actually fix these problems. So
Well, I think some of that too is just the fact that we need way better education. And we harp on this all the time. Most companies won't pay for education. This is education that could have been made aware to a ton of, not just, and I'm not talking about the public, teams. Most teams have brilliant people as founders, but the majority of their other positions are not well educated in DeFi. And I tell this to people I meet all the time. I'm like, this is why groups like ours, like Beacon DeFi, and then just the education piece is so important. I know that it sucks that 47% had the 1 of 1, but if let's just say there's a 2 of 2, I mean, the 2 of 2 would have been massive. It was like 1 of 1 is not enough. Is basically what's going on here. And Layer 0 has been absolutely silent since April 19th. That's 3 full days. Nothing. Nobody from the team has said anything. Well, some certain people who are kind of affiliated have. And there's a lot of blame going around. But at some point, you're just going to have to, it's just one of those things. But it's also the slippery slope, right? With Tornado Cash, right? Everyone's like, yeah, Tornado Cash deserves to be fine because they can't necessarily know that everyone who uses their platform is going to be there to launder money. You could kind of apply this to Layer 0, right? They had no idea that hackers would be using their systems to be moving money around. But they are. And they've gone after... and that's the second point. Because smart contract hacking has become so cumbersome and hard to do, groups are now going after off-chain infrastructure. Things like RPC nodes, things like validator networks, things that don't necessarily require smart contracts, and groups that can be easily socially engineered. The Vercel hack, I'm not even talking about Vercel today, but Vercel got hacked. Lovable got hacked. Team members got hit with social engineering schemes, or one guy, the Vercel one, the developer got compromised through context.ai, which has full security certifications, by the way, SOC2 certifications, and you're just like, what is going on here? And the reason I bring up Vercel, a lot of developers, like myself, like you, Robert, we will build things and put them on Vercel. The problem with vibe coding is that a lot of these developers who don't know anything about coding will put things that should be sensitive, most likely in non-sensitive areas, or in easier to access than others. And that's kind of what happened there. But there are multiple protocols in DeFi that use Vercel as their front end, as their website, as their interface to the world. Thankfully, most of them are seemingly okay. I got an email from Vercel saying my projects are fine, but I'm not running anything crazy. Groups like Orca, for example, big integration with Vercel. They're safe, but they went ahead and went through the rotation of secrets and all of that to make sure that they're on the up and up, because this is apparently a bug that could go through Google Workspace if you happen to use that. So if you use Vercel, if you use Google Workspace, please take a minute to go through, do the research to make sure everything is up to is clear. And I would say, even if you said you were clear, rotate your secrets around anyway, because they're not going after smart contracts anymore. They're going after everything. So
yeah, I just hope it just doesn't get used as like a example of why DeFi should be restricted, or...
And that's the other part of the argument, right? People are talking about circuit breakers. People are talking about rate limits. Certain groups now have rate limits, like I think Athena and EtherFi mentioned that they have now rate limits on how much can be moved without But then you talk about, well, what about trustless and permissionless markets? Yeah, obviously, we're here for that tech, but I don't think that tech is there yet. Clearly, it's not, right? Because we're dealing with some really fundamentally bad stuff here. Um, this will be a time where education and hardening is going to happen. This probably won't happen again at this scale. There will be new things that are going to be put in to prevent off-chain infrastructure from being pwned in this way. And I hope it happens quickly because we need a reshuffling, I guess would be the word, of the guard. You know, multiple security research have said that there are numerous members of North Korea's groups that are infiltrated and actually working at a lot of these protocols, which is also bad. Maybe a reshuffling of the way things fundamentally work can flush all of that out, and now we can get back into being the future of finance again. DeFi is not going to die, guys. DeFi is going to continue to be reborn, iterate, and get better. That's the beauty of this system. It's not like banks where they can be bailed out. This is a system that can iterate upon itself and become stronger and better and more robust to respond to challenges. So that's the beautiful thing about DeFi. So, any additional thoughts, Robert, before we move on?
I think pretty well covered at this point. Yeah.
Thank you, sir. The one thing I wanted to talk about today, since I must have covered it because it is not here. Let me grab it. So big news, and I haven't had a chance to really reach out to any other subnets that can tell me a little bit more about this, but the Tau Institute was created, and I think not enough people are talking about it, but this is a
I
terminal.
actually just heard about it today.
Yeah, yeah, they released this on the 16th, so it was last week. But and again, I don't know if this is necessarily different than what's available with Tau.app or Tau Stats, but the ability to have a terminal that's open source where you can access data from all 128 subnets, I think is pretty cool. To kind of look at what it looks like. They do have a subnet risk index and a bunch of different research and methodologies that are available for every single subnet here. So this is good for transparent access for people who are curious about BitTensor. If you want to learn more about how these specific groups are all going to work, I think it's good to know. So, Robert, you being in the BitTensor ecosystem, kind of give me a heads up on how valuable you think this information will probably be moving forward.
Yeah, I think very valuable because there was like a site called learnbittensor.org, something like that, but it's very inactive and it's very limited. If they do this right, I think it's very valuable because also on Tau Stats, it's good for medium to advanced users because on Tau Stats you can see all the emissions and all the details and link to the GitHub for different subnets, but it's on Tau Stats, for example, it's lacking context. So if they can do proper explainers here, proper education here on each subnet, not only that, but keep it up to date because like subnet information changes pretty frequently sometimes. I mean, like there's a fairly steady rotation of subnets sometimes within a certain percentage.
Yeah, for demotion
Yeah.
and stuff like that. I'm sorry, deregulation, I think is the correct term.
Yeah, deregging, and so sometimes subnets change, and people are not even aware of it until weeks later or months later. So
Yeah.
yeah.
So what's interesting is that you can get a free account. You have to sign in with a social login, whether it's a Google or Apple account, and then you get access to all of the research. If you don't, just the guest mode, you just get the subnet risk index, which is good to know. Seeing how some of these are doing from a risk standpoint. Green is, again, I know nothing about Liam. I'm curious to know a little bit more. Um, but these actual dashboards they have here, so Tau Flow, Subnet Traction, Subnet Registration, Fund Tracker, and Datcos. All very good stuff, plus alerts and other tools that are available if you sign up for a free account. So this is good to know, in my opinion. This is the first full year after the Bitcoin halving. I'm not Bitcoin, the the BitTensor coin halving, the Tau coin halving. So it's good to see stuff like this being built and being pushed. So um, we'll kind of see. We'll see exactly kind of how that all plays out. But yeah, good to know there. In the same vein, Hyperliquid Policy Center, uh, now a thing, and advancing policy. So HPC is funded by the Hyper Foundation. This used to be called something else because I've been following them for a while. It looks like. Interesting. So if they're going to be actually talking to groups about Hyperliquid, this is actually very bullish. Not that most people aren't bullish on hype anyway, but to get hype thoughts and ideas through this Hyper Foundation funded group out to institutions, to family offices, pardon me, and potential market participants. This is all really good stuff. You and I are both Hyperliquid users, and always interesting to see exactly what they're going to be doing to move things forward. I think this is a step in the right direction. What are your thoughts, Robert?
Yeah, definitely. I mean, yeah, like similar to the Tau Institute thing, and also with Hyperliquid, it's bringing these platforms and products to a broader audience is always good. Um, it's something we take for granted in crypto. I think like we have sort of quote unquote experts like us or like you, I guess,
Us.
and yes, yeah, and we have experience we have years in the space, and we take for granted our knowledge of different projects and of the culture and all that. So yeah, it's we need a lot more of this for every sector, I think, to really onboard those that broader audience.
Agree. And again, thanks to Robert from Bitcast for being here. Congrats, of course, on the position. Please like, follow, and subscribe. We're looking to meet a bunch of milestones, and we need your support to get there. So if you like what you're hearing, if you enjoyed our banter today, our talk, our analysis, we're gonna have Matt Farrow from Hydrex from Base here next week. Excited to have him on. We'll talk about what's going on with Base blockchain. I guess I should talk about I forgot to bring it up, but I have it here now because they just talked about it today, which is the first version of the new base. We talked about this a while ago. It's been a minute, but Base has decided to fork itself away from Bedrock, which is Optimism's full stack. So Base Azul, and Robert, what's the meaning of Azul? Azul in Espanol.
Significa blue,
Blue.
señor.
Sí, sí.
Mhm.
Esta es la palabra de la color blue.
La traducción es blue. Sí.
Exactly.
Mhm.
It's going to be the first independent network upgrade for them. So May 13th is targeted mainnet release. That's not very far away at all. I was like thinking like maybe Q3. No, May 13th is going to be the new date for Base, codename Azul for Base Blue. That is very pretty though. I do like that mix of colors. I like the way that looks. So,
Yeah, it's cool.
yeah, they're gonna take. So here's the thing about Base and being on the super chain. Let's be honest. Base was leading the innovation there, with the exception of maybe the decentralization and the super chain ERC token standard. Uh, Base is going to bring flash blocks, all the gas management, all of the great things that they were building on Base, being the layer 2 of Coinbase, out into this new market. So we may even see some really good Coinbase adjacent or facing or Coinbase advantaged type of experiences, kind of like what Kraken is doing with Kraken Inc. They want to make Inc. the penultimate Kraken experience on chain. Like if you go to Inc., it should look just like how it would look if you're using Kraken in general. So, and I think they're doing a great job. I think they're moving at the right pace. I really like what they're doing with Tidro and some of these other protocols that are coming around. Obviously, they bought back so they can have tokenized stocks coming on soon. But Base has a chance here to really bring more of those Coinbase like experiences on chain. So I'm going to be very curious to see how this looks. Uh, I'm not going to say that Base has regressed, but ever since they kind of cut ties with Zora, ever since what happened, I think with everything that was in December, that was like, yay, is kind of like, I don't know if people are still using the Base app. I'll be honest, I haven't been using it. They went more towards instead of a social look, they're now a trading first look, and I don't think that was the. Ugh, oh man, it's. Let's hope Azul delivers, because I do like Base blockchain. We've been covering it since they launched in what August of 2023. So, um, yeah, we'll see exactly how this. Oh, they have a little context here. Oh, 1 gigagas already per second. That's good. That's good performance. Multi-proofs. Yeah, they're looking to accelerate what OP is doing. OP actually they withdrew their stage 2 stuff due to some things they were going to come back to later. But yeah, this will be good. This will be good if they can deliver on all this. Oh, they have an ImmuneFi bug bounty. This is something we talk about in our content with our communities. Bug bounties are very important. They help incentivize security research to come through and try and just work through the system. If you can find a bug, you can win up to 250 grand for doing so. Really, really good thing that that's implemented here, because security researchers love bug bounties, and many of them make a really good living off of trying to evaluate a bunch of them, or trying to not evaluate, but exploit a bunch of them. So, bitcast.network is where you can find Robert and his
Mm-hmm.
musings. Again,
It's my new spot.
go ahead and do the pitch, sir.
Yeah, absolutely. Network. So yeah, it's an excellent facilitator, properly incentivized for between creators and brands. You can sign up as a creator, YouTube creator, like our friend Chris here. You just got to meet a certain threshold. All the docs are there, and we can share them with you as well. And once you sign up, you can start earning on campaigns, and the earnings are pretty lucrative actually, for most campaigns.
Yeah.
Um, yeah, and if you're a brand, we are expanding outside of BitTensor. Like I said, we got BitGet, looking at some other exchanges, but also looking to expand to other markets like prediction markets and so forth. So yeah, it's kind of our next step is to figure out, because I mean, as a BitTensor project, it's easy to appeal to the BitTensor community, but trying to take this model, which is effectively like a solution to InfoFi on one end, because we also have a Stitch 3, which is an X creator platform as well. But for Bigcast, it's really just making creator campaigns a hell of a lot more efficient for brands, and giving greatly expanded access to creators without having to, get like $2,000, $3,000, $5,000 deals. You can just hop on and start creating.
Yeah, and you get paid. You get paid pretty quickly, I will say. Yeah, I'm really
Hmm.
pleased with the experience so far. I mean, I've been kind of connected with them for quite some time, in excess of 7 months now. So, but Ken, who's
Yeah.
normally on the podcast, is a lucrative Bitcast creator. He actually put me onto it, to be honest, a long time ago. So, yeah. exciting to see that it's not just, so the important part about this and why this is bullish for BitTensor is this shows that BitTensor is not just about, trying to catch up to ChatGPT and and Claude and all of that other stuff. They're doing multiple things. BitTensor as an ecosystem has stuff like creator stuff. They have shout out to Gavin and Pranav at Lead Poet doing hiring models and recruiting. There's groups doing weather,
Exactly.
diseases, proteins for diseases, and using AI for that. Game assets, audio stuff, uh, various things that are out there. Shout out to Hermes at 82. Unfortunately, I think they're going to dereg because they just couldn't quite turn the corner. But they were looking to do a penultimate agent assistant. So, um, but there's multiple groups that
Yeah.
are out there. So
Yeah, BitTensor's, it's not just about training AI or building out AI infrastructure. It's, I mean, the core incentive mechanism can be applied to anything.
yep,
It's just about like the mining. Yeah, it's just about finding a product fit, um, mapping it out, in detail, and then and then as a miner, you hop on, you serve that purpose, you serve that niche, and you can start earning. So it's literally built to incentivize pretty much anything.
yeah, I'd love to see for creators as once they reach a certain brand, and obviously not everyone can be a creator, but the moment you become a creator, if you hit a certain tier, then you open up another unlock, and to be able to have like a client that helps with marketing and pushing things out for these creators, so you actually can also profit off the creators that are on the platform uh, by helping with their distribution. I think that would actually be a really cool unlock as well. You guys can have that one for free. So we'll see exactly
Yeah,
how
cool.
that works out.
Yeah, yeah. And the way they put it is, it's just an incentive mechanism
There you go.
for digital commodities.
There you go. Exactly what it is.
Yeah.
If you want to check out our free group, please feel free to do so. School.com/beacon for total value lock. The name. Oh, I did that again. How did that happen? The name, namesake for our group. There we go. Namesake for our podcast. We've been doing this podcast every Wednesday, 1 p.m. Eastern, since December of 2021. You can, of course, catch us on Friday at 3 p.m. Eastern for our Beat the Banks community training podcast. That's been going on since January of 2022. Uh, so excited to have Robert on, obviously. Congrats again. And excited to talk more next week with another great panel. So, again, if you liked what you heard, please join our free group or give us a like, a subscribe. Recommend it to somebody else. We love that kind of stuff. We have some things cooking because Beacon's 3-year anniversary comes up in a couple weeks. So, um, yeah, excited to talk more about that soon. But until then, we'll see you next week. Take care. Be safe and make good choices, guys. Don't overinvest. Have a good diversified portfolio. If you need to learn more about that, feel free to reach out to me. Always happy to help. Take care. Beacons up. Banks down. Take care, everybody. Have a great day.